morning, good afternoon, good evening. It all depends on the place you are viewing my channel from. All depends on the country zone where you are viewing my channel from. My name is Godwin Okeke, the instructor and the founder of MIA Market Experience Academy. I just want to use this privilege to thank you very, very much for staying tuned right from the beginning of the episode 1 of our beginners class in the Forex market, even to the end of it, which is the 9th episode, which is today. We'll be rounding up the beginners class to graduate into what the intermediate classes. So for this Forex journey, we have 3 phases. We have the beginners phase, we have the intermediate phase, we have what the advanced phase. So after today, we'll be diving into the intermediate phase where we go in details, bit by bit, trying to do what break everything that I've been teaching from the beginners class. So if you have actually commenced this journey with me, please, I will encourage you to stay put. Stay put, you're actually on the right track. And I want to say thumbs up to you. If you have come thus far, keep pushing. Keep pushing. Believe in the process. Believe in the process. Thank you very much. So today we'll be actually diving into what we have today, which is what introduction to what risk management. Follow me as I share my screen with you. Thank you very much. I believe you can see my screen, right? All right, so today let's scroll down a little bit. All right. Introduction. I believe you can see my screen wherever you are. All right, the last class for the beginners class is known as what? Introduction to risk management. Introduction to what? Risk management. In everything or in every occupation or in every career or professionalism of life, there is always what? A glimpse of risk. There is always what? Risk. Whether you are walking on the road, whether you are a driver, whether you are, it doesn't matter the business, whatsoever is the profession that you do in life, there is always risk that is what? Attached to it. So it is in the Forex market. There are risks in the financial market. Well, that does not mean that you cannot make money in it. The most important thing or the most aspect of it that will keep you sustained in the market is what? Understanding that there is risk in the market and knowing how to mitigate the risk for you to make profits. Whenever you are trading or looking out for opportunity in the Forex market, the profit is not the main thing. The most important thing is what? You being secured in the market. You being able to do what? Secure your portfolio, your accounts that you're managing before you strive to do what? To make profit. Before you even enter a trade, you know the amount of money or percentage that you're going to lose from your portfolio. That is how a wise and what? An intelligent trader trades. You don't go all in. You don't go all in into the market with all your capital. Yes, it's good to take risk, but to me, I think that's foolishness. Trade in such a way that when you trade tomorrow, you still come for another day to fight for another day. Don't put all your arsenal in a whole one-day fight. When there's time to retreat, you retreat to come back for another day to fight. That is how this market is. So let's dive in. Introduction to what? Risk management. Basically, Forex risk management can make the difference between your survival or sudden death with forex trading. Exactly. If you want to survive in this market, let risk management be your backbone. Or if you want to have high BP, this forex market is not for you. Don't go and use your life savings and dump into the forex market. It will go if you don't have knowledge about the forex market and you don't know how to manage your risk. The risk management is a combination of multiple ideas to control your trading risk. When we're talking about risk management and forex, it's not just one particular thing. It could be you cutting down your lot size, you cutting down on your lot size, or you using 0.5% of your portfolio instead of going for 1% risk, 5% risk, 10% risk. No, whenever you are trading, think about the long run. Don't think about the immediate gratification or the money that you're going to make immediately, because whenever you are trading or opening a particular position, you should actually think whether if this market goes against you, what will be you should think about if the market goes against you, what will be the penalty. That should be what will come to your mind. That should be what will come to your mind. What about if this market goes against you? How much are you willing to give to the market? So it could be using a proper lot size, using a proper percentage risk, either 0.5 or 1%. It all depends on the one you are very, very comfortable to risk. Risk management could also be knowing the best time to do to trade. Is it the New York section? Is it the London section? Is it the Asian section? You should know when the market moves. Know the kind of pair that you trade with. Master the pair. Yeah, I believe in the last class I talked about that as a beginner, you don't need to have more than 10 pairs. It's like you trying to know 10 persons. It's very difficult. You cannot be able to know them. But if you can start with at least 1 or 2 pairs, it will help you to know the psychology and the movement of that pair. What is the best time that pair make a lot of moves? So all these things put together are risk management. Before you enter any trade, you should know the amount of money that you are willing to give back to the market when you lose. Let's say you have a $1,000 portfolio that you're managing. If you know that you losing $5 per trade will make you to be healthy and comfortable, fine, go ahead of it. Think about long run, not what you will make. Don't be like a trader that will trade a $1,000 portfolio and probably use $500 to enter. So that means if you trade 2 times, your money is gone. Especially if you are the type that is living in part of the world where we are in Nigeria, where you know that a dollar now is almost like 1,000 naira. So you will think twice for you to fund your account what it will cost you, and you will decide to do the right thing. Yes, I will be here telling you all these things, how good and how powerful they are. But when you are in front of your screen, it will be like there's a spirit that is controlling you. That's how it's always been in this market. I will not come here and start telling you how good and how perfect it is. It is a process. You grow out of it with time. You grow out of it with time. So that's just how it is. So risk management is a combination of multiple ideas to control trading risk. It can be limiting your trade lot size, hedging, trading only during certain hours or days. Hours or days, or knowing when to take losses.